All right, this is Mitch. Welcome to the Real Estate Investor Summit podcast. I have Minesh Bhindi here. Did I say that right, Bhindi? I didn't ask you before.
You said it absolutely perfectly.
Okay, good. I was worried I might have messed that up. We're going to be talking about real estate, and what I'm really interested in talking about is how young this guy started. He did his first deal at 16, put 85 grand in his pocket. He's talking in pounds, though. He's over in London. So let me get some of this. Let me get some of the work out of the way, Minesh, and then we'll be right with you. I'd like to thank taxfreefuture.com for giving us the opportunity to invest tax-free or tax-deferred. If you haven't seen the videos over at taxfreefuture.com, please go do that. They're wonderful. It'll show you how you can start with a little bit of money and turn it into a lot of money in a relatively short period of time, which is the trick. And go to taxfreefuture.com because you will not believe what your financial advisors are not telling you. All right, we're back with Minesh. Minesh Bhindi, tell us a little bit about yourself and how you ended up in London.
Well, I was born in London, so that's how I ended up. Yeah, that was easy, but getting here was absolutely the easy part. So I was born here. I started working alongside my dad when I was 16 years old. The deal that you mentioned I actually did at 18. So I'm sorry for letting you down there, but
that's cool. Hey, but thanks for the transparency. Hey, we have an honest guy on the show, so listen up and tell you the truth, obviously.
Yeah, so I did that at 18, but at 16, I was watching my dad negotiate real estate deals. He worked with a consortium of investors, and they basically negotiated deals and packaged them up, and then the investors bought them, right? Very simple. But I was watching him negotiate a deal, and I stood by the doorway, and when I was 16, probably 15 and a half, and and he got off the phone and said, "What are you smirking at? What are you smiling at?" I was like, "That sounds easy. I could do that." Not knowing anything about what he was doing. It was just an utter throw your balls into the ring sort of moment. And instead of telling me to, screw off, he basically said, "All right, well, show me." And so I had to, when your balls sort of go into your throat at that point, you're just like, "Oh shit." He's just called my bluff. So at that point, I had to figure it out, and I started, learning about real estate, learning how to talk to people. And I think because I was so young and I didn't really understand the emotional side of business and as a whole, I would just go in and ask for things that I wanted and not even care whether the person said yes. So we were working with new build developers and new build developer managers, and I would walk in and say, "Yeah, I want 30% off." And that's crazy. And before they even did a counter offer, I'd walk out. So to them, it was like, what the hell just happened here? This is nuts. So more often than not, I started getting the numbers that I wanted or very, very close to it. What I didn't realize was everyone negotiators only get 24%. Could only get 25% because they were trying to be reasonable. Whereas for me, it was just like, yeah, okay, this is what I want. Give it to me, otherwise I'm out of here. So very quickly, I started getting the better deals.
So you wouldn't get the 30%, but you'd get 24% discount.
No. I was hitting like 28, 29% discounts, and the other guys that were working for, organizing the deals for the consortium could only hit 24%. So my deals, and I was like 16, so you can imagine how much that pissed them off.
You said the right thing. I mean, an important thing, the walk away. You have to be able to walk away. That's one of the things, love him or hate him. That's one thing Trump's good at. The man will get up from the table and walk away. It's negotiating 101. I was just telling someone the other day, is there a lot of activity on that house? I said, no. I said, then walk away. I said, give them your offer and walk away. And they said, what if they sell it? I said, you just told me there's not that much activity. You're in MLS. There's not that many showings. There's hardly any showings. Walk away. You can go back in 2 days if he doesn't come down. And sure enough, I said, give it 48 hours. Walk away. He walked away. Within 24 hours, that guy called and accepted his offer. I said,
I've actually wired money for a deposit. And then the agent said, "Oh, no, we can't take the deal." And so I've wired them. I've sat in front of them and wired them the money. and said, the money's in your bank account, and showed them my phone, and the money's in your bank account, send it back. If you can't do the deal, send it back. You know, I haven't had one wire come back yet.
Wow. So, what were you doing in the heydays before the crash? What were you doing? What was your
that was exactly when I was in this zone of no money down structures. We would go and figure out how to get valuers to value properties at whatever valuation we wanted them for. So we were going ahead and valuing properties at 25% above market value, and then obviously we were getting a huge discount from the market value. And then we'd go and borrow 85-90% of the valuation amount and pay 30% less than the actual property amount. So we were walking away with huge cashbacks on the day of completion, not putting in any money and walking away with equity. And obviously, at that point, we were selling these properties as well to investors that wanted to get involved in real estate and get those cashbacks. So yeah, money on all fronts on real estate in that sense, in the sense that we were buying our own deals, we were structuring them, we were making money on the selling of those deals, we were making money on the finance of those deals, we were making money on everything that you can imagine. But we were only working with new build properties, which is not what you do, obviously.
No, and so new build properties, it sounds like you're talking about commercial properties, or are you talking about houses?
No, residential new build. So, but nothing that was like 6 months away from completion. These were completed units that no one was buying.
Oh, okay. Completed units that no one was buying. So,
or not buying fast enough, rather.
You had a glut. There was a glut of houses.
Yeah, so it was well, even if there wasn't a glut, what was happening was developers wanted to move on to the next project. So if they could shift 25 of their last units and just get it over and done with in 30 days, they were giving discounts. So that's what we were taking advantage of.
Okay. So how did this theory hold up during the crash?
It was, to be honest with you, if you managed to cash flow and you didn't take the cash back and go and spend it, it was a fantastic opportunity to acquire a lot of property, right? Because you weren't getting any money, you had the cash in the bank, everything was good. If you took the cash back and went and bought Porsches with it, right, you got into trouble. So I saw a lot of people get into trouble. I was very lucky in the sense that I had people around me sort of watching me, and especially at 18 years old, right? Watching me, telling me that I shouldn't be doing the things that I was doing, like flying to Monaco for the weekend. And I should be putting that money in the bank because something is going to happen at some point. Would I do that now? No, but that's what we were doing then.
Yeah, so very important. I've always said this, the cash extraction at closing, when you borrow up as much as you can on the house, is really dangerous unless you take that money that you have and go buy some cash flow producing assets with it. Then that's the only way to survive, right? This is what you just said. If you go out and start buying boats and what you said, Porsches, that stuff's not going to pay the bills when the crash hits, and a certain amount of properties will go under, or they'll just break even, or they'll turn negative. If you took all of that cash and bought some stuff free and clear or whatever, you're going to make it through all right,
Right. That was the biggest mistake that I noticed with investors. It's just they took that money, got very excited, and went and bought holidays and cars and et cetera, et cetera.
I've been a fan since the day I was born. I flip houses and owner finance houses, about 100 a year. Maybe this year about 120. I don't know why, but we're on pace for about 120 this year, and it's been as tough as it's ever been to buy houses in the United States, because they got so many house flipping shows, and everyone's making it look all glamorous and easy. Even those people on the shows are not. They're not that easy. I know the houses they're doing in my town is. Those houses didn't sell when they said they sold, and they didn't sell for as much as. And some of them got foreclosed on, and they're up there on TV saying they sold them and made $50,000. It's a bunch of bullshit.
Yeah, that's my one gripe in the real estate space, is when celebrities like that make it look so easy. because it's really not. It's really not that easy. And so many people get suckered into the fact that, oh my God, it's easy. I'm just going to quit what I do and go and do real estate now. You know, I'm a real estate guy now all of a sudden, right? And
My real pet peeve is the people that do about 4 houses and then they have a course.
yeah, exactly.
They flip 4 houses and now they're going to teach the world how to do it.
I have to remind those guys, you know, I sold 20 million pounds of real estate between the ages of 16 and 18 before I even started teaching it.
Right.
You know, and they don't believe that. They just can't believe it. But that's what happened.
Yeah. It's the experience. You know, you don't get experience. You don't get enough experience in 4 houses, and you can read all you want to. You don't really get this stuff till you live it. You know, which is why it's great to have coaches and mentors. One of the things you were talking about was that you believe in short-term coaches, not long-term mentors. So talk about that a little bit.
I think that coaches and mentors should be there for a goal that you want to achieve. Once you achieve that goal, you shouldn't be sticking around with the same coach and the mentor. You should find the next one. And a good coach and mentor should say that to you anyway. Once they've helped you hit a particular goal, and the goal should be well defined, they should be moving on, and you should be moving on as well. It doesn't mean you can't be friends, but you have to move on. You know, big companies do this pretty regularly. Like, will reshuffle their executive board simply because they know that this guy cannot get us to the next revenue goal. So it's the same situation that I think people have got to be in. Like, you can listen to someone in the motivation part of your journey. Yeah, sure, listen to someone. In the implementation part of the journey while you're new to it, sure, listen to someone. In the part where you're looking at, all right, I've got my feet wet, I know what I'm doing now, I want to build a foundation, listen to someone else. And then in the part where you want to take it to the next level, you need to listen to someone that's done that.
Yeah, you know, there's different segments of your business too. I mean, there's, you know, learn to negotiate better is a different guy than the guy that will teach you how to sell, or it might be different than the guy that'll teach you how to automate your business and get your business on autopilot so that you don't have to run it. Different than the bookkeeping aspects of that stuff. So I mean, there's all different kinds of
huge. Yep.
And you can't go to the same guy for the same thing. I inadvertently have done what you're talking about, was pick people for certain things and then get it done, and then that task is over, and that relationship.
Yeah, all successful people have. All successful people have. The most disappointing thing that I see as far as seminars and things like that go is when people are still attending the same sort of seminars after 10 years. It's like, come on, you know, you got to move on. Like, you should be attending a seminar run by a bank now about the type of financing that you want to do when you started 10 years ago, you know?
Unfortunately, there's a lot of that around. How old are you, may I ask?
30.
30. Oh, to be 30 again. So I didn't find my butt with both hands till I was 36. And I did everything between 36 and 58. You know, about 2,000 houses in town and a bunch of storages and a whole bunch of mistakes. That's just 2,000's the ones that worked out. That didn't count the ones we tried that didn't work out or that we couldn't close. So people go, oh, you've done 2,000 deals. Says, well, no, I've probably done 10,000. I just only closed on 2,000.
Right.
But so are there major differences in London and the U.S.? Do you do stuff in the U.S.?
I don't. So my real estate investing now has transferred into using REITs and letting analysts and geeks and nerds that want to focus on that 24/7 do that for me. We stopped buying real estate in terms of actual physical houses probably in 2011, something like that. And my focus turned to using REITs and using our higher leverage strategies on from a market perspective to generate the better returns that I was seeing. But I haven't done anything in the States. I have a lot of friends that do a lot of real estate in the States. So I've heard from, and obviously know they do. As far as the difference goes, I think one of the things that you guys are going on really well right now is just the economy. I think it's fantastic. You know, say what you want about President Trump. I think he's doing a fantastic job as far as the economy goes. And I think most people should agree on that. I think also most people will agree on the fact that maybe you should talk less as well. But as far as the economy goes, I think anyone that disagrees that what he's doing with the economy is great, isn't really looking at it strictly from an economic perspective. So you guys have got that going on. We haven't. We're stuck in the Brexit, bullshit, if I can use that word.
Yeah. Yeah. So a REIT is a real estate investment trust. Talk about what kind of REITs are you in? Are you in big commercial buildings or land development or all the above, or what are you in?
Well, all the above. So we use ETFs that go and we put our money into an ETF. The ETF will, in essence, go and buy a bunch of REITs. So with one stock purchase,
what's an ETF?
An exchange traded fund. How it works is I'm going to put my money into an exchange traded fund. That fund, it's sort of like a fund of funds, right? So they will then go and take all the money that's pooled together into that particular ETF and go and put it into the particular REITs that we want to go into. So it's a REIT ETF that we use. And with one stock purchase, I'm instantly diversified into 8 different housing sectors that are constantly being managed to increase the cash flow, constantly being managed for me. So I don't have to deal with tenants. I don't have to deal with mortgage brokers. I don't have to deal with anyone.
Okay. So, and what kind of returns are you able to achieve in these REITs?
So since inception, this particular one of the ones that we use has an 8.48% compounded growth, a 4.52% dividend yield, and we generate an extra 12% a year with our options income strategies that we use.
Okay.
I mean, this is completely hands off. You're with one stock purchase, you're buying 154 different real estate holdings. You're diversified into 8 different real estate sectors with one purchase. The yearly fee for doing this is 0.12% that the fund charges to manage all of that for you. And they've got $64 billion worth of wealth being managed through the ETF. So it's a pretty big hands-off way of doing it. So for anyone who likes a hands-off approach, you can do it because you can do it straight from this thing anywhere in the world.
Yeah. So do you teach that?
Yeah, that's what we teach. So my company is called Perfect Portfolio, and we teach people how to approach 3 different asset classes, what I think are the most important ones, which is gold and silver, real estate, and the stock market. And we teach people how to safely invest into these things. So my mission after 2008 turned into trying to see whether we can make safe investing right? Because I think people are too attracted to risky stuff. As you know, right? With what you do, it's very safe, it's very stable, but someone will want to go ahead and take that extra risk for no reason, right? So we want to bring that back. Well,
so we probably let's redo this here for a second. So we're going to do a cut right here. I'm sorry I didn't mention this before. Don't mention your website names. I'm going to drive everybody to a link called reinvestorsummit.com, Minesh. .com/Minesh, and there'll be all the links to get to your coaching and everything, but I want to drive them through this gate so you can see who comes from this show.
Yeah, I wasn't going to mention the websites anyway.
Oh, that's okay. But the other thing is here in the States, they got a real trouble with saying the word safe. You can say minimal risk, or safe or guaranteed is really tough, okay? Here, okay. Let's say minimal risk or very, what's the word? A very highly contemplated risk. You know what I mean? Okay. Highly calculated, risk that minimizes your exposure or something. But I wouldn't say safe or guaranteed here. So in 5, 4, 3. So how do you manage this with a minimal risk, or how do you manage these accounts? How do you look at your risk side?
Yeah. So the most important thing for me with an investment is to have a managed controlled risk, right? So the point of what we do is we're not leveraging, we're not using any tools that are going to force us out of the market. We're not going to get into any situations where we're not in control. And so we want to make sure that you're risk is absolutely tailored to what you're absolutely comfortable with. So for me, my goal is to not use any leverage. I don't want to have any leverage in the market whatsoever, because the market works in physical real estate, right? So even though it's the same principle of leverage, it's mark to market. So every single second of the day, it's being adjusted. And if it comes down, you don't have to wait for the bank to come and knock on your door. They're just going to sell your positions. And so we want to avoid that scenario. And regardless of that, so that's how we manage it from an actual account management perspective. But in terms of real estate, one of the biggest risks I saw in real estate for me was when we were buying property and a particular area would go down in value, right? Just all of a sudden, a particular area would go down in value. So I don't want that risk. And so doing it this way, I'm diversified all over the USA. I'm diversified into 8 different sectors. And most importantly, I've got the world's best nerds and geeks and analysts working to make sure that they're generating the highest return for their investors, simply because they want more money and capital drawn into the fund. And so the harder they work, the better the results they get. And the more capital, like $1 billion, the more will go into the fund. And so we manage and tailor risk in multiple different ways.
Okay, so you teach this stuff. You teach what you're doing in the REIT department, how you're looking at it, how you're minimizing your risk, how you're, I don't know, for lack of better words, how you're sizing up all the deals and why you feel comfortable. If anyone's interested in that, you can go to reinvestorsummit.com/Minesh. That's Minesh. And that'll get you over the show notes and get you a link over there if you want to explore a completely hands-free way of investing. How much does a person need to get started in this particular strategy?
You can test it for $10,000, but generally the average investor comes in with about $30,000 to $50,000. We work with 155 clients a year. We don't go over that. That's after so many years in the game, I've sort of learned what my number is, which allows me to continue focusing on my investing as well. So it's 30 to 50,000. We've got investors that they get comfortable with 30 to 50,000, and then they'll go up to, we've got a couple guys with $10 million plus invested using our strategies. Yeah,
most people start small, put their little finger in or something, and then they get comfortable.
As you should.
Yeah, and then get comfortable and learn the lay of the land, and then say, okay, I get it. So I'm willing to go in a little deeper.
You should. And that's why we put so much of our training out there for people to scrutinize, right? And I think scrutiny is the right word. You should be scrutinizing everything that I'm saying and figuring out whether it's right for you or not. If you look at me with an eye for scrutiny, I think that's better than looking at me for just like, hey, this guy might have the answer. No, scrutinize me, question us, speak to my team and understand exactly what we do before you get in. And also one of the things that we do is once somebody's a client, they get weekly coaching calls for life. So we've got people that joined in 2010 that are still doing the strategies today, and they've got coaching calls without paying an extra penny.
Oh, good. So tell us a little bit about that coaching. Where does it start and where does it end?
It starts online. We go check out the training on real estate that we have, see whether you like it. Like I said, scrutinize it. Don't just fall in love with me, right? Scrutinize it and understand whether it's absolutely right for you or not, and what we do. Then you speak to the team, and we make sure that it's a mutual agreement, right? It's as simple as that. We want to make sure that your goals are not to turn $1,000 into $1 million next week, because we're not going to be able to help you with that, right? We just want to make sure we're on the same page. You'll do that. You'll speak to the team. I'll review the application, and then once you're in, it's as simple as that. We send you the logins. You go through the training. It takes about 6 to 7 hours to go through the training, and then you're in. You get one coaching call with our head coach, who actually invests his real money. And I know that people might go, why is he exaggerating on that? Because most of these guys that are selling investment stuff are not investing their real money. And when you ask them, the only answer they'll give back is, oh, I'm saving up so I can start investing. A whole bunch of bullshit. right? They're not investing because the shit doesn't work. It's as simple as that. Our guy actually invests his and his family's money using our strategy. And that I think is
That's a lot of proof of the pudding. You know, my companies and my family and my money is all in what I do. And when I ask someone else to loan me the money to buy these houses and, you know, and give them a first lien and pay them a rate of return, it's not, I'm loaded up to here with it. I'm a wholehearted believer. And I think that makes a lot of sense that, you know, the people that are coaching you and coach that you're offering to put up as coaches are doing the strategies that they're teaching. So that's really important.
Yeah, and that's one of the reasons why I didn't want to take on 500 clients, right? Because there's no way it's going to be tough to find a coach that I can trust who's actually using the strategies, and et cetera, et cetera. So I don't want to do that. Like, I want to work with people that are very good at what they do and actually do it, and that can actually help people because they've been through it themselves.
Yeah. So have you been able to transform some people's lives through this strategy?
We've got clients, like I said, since 2010 when we first started. We've got ex-Wall Street traders. We've got single mums in Indonesia. We've got people that travel on holiday now. And one of our clients sent us a testimony. She said, I can't believe I just made, you know, a 2.7% return this month by placing a outside of a 7-Eleven, right? So it's like, yeah, my main goal is to allow people to experience more time, more freedom, and just more ability to live life. And my real goal is to allow you to manage a fully balanced portfolio from one of these, anywhere in the world. You can, and you've got to make sure it's an iPhone because Samsung suck. But any smart device, any laptop, you can travel anywhere in the world. You know, there you go.
My iPhone, I do everything. Like, people go, "Where's your computer?" I said, "It's in my hand." You know,
Exactly.
I don't even have a desktop computer hardly anymore. You know, I mean, I might have to go there to rent something, but all right, go to reinvestorsummit.com/Minesh, Minesh, and you'll get a free consult over there. You'll figure out how to connect. If you want to learn more about how to invest in these REITs, be diversified, get some hands-free, hands-off investing done, and be able to do it from your phone. I think that's really key, because being able to be anywhere in the world and take care of your business is a dream come true for what people are shooting for. That's what they're trying to.
That's what they should be shooting for. That's what they should be going for. You know, one of the things that I find completely unacceptable is when normal people that have never done this before, all they want to do is have a lifestyle that they can enjoy, right? You were born on this planet, and then some asshole tells you, no, you can't enjoy that lifestyle. You've got to live a budgeted lifestyle. You've got to, live frugally. You've got to do these things. Listen, at the end of the day, you can do what you want to do. It depends on the setup that you have, and it depends on the strategies that you implement. So for me, don't believe any of that shit. Living a good life is not just for people inside of a little club. You just got to get the right information. Once you have the right information, strategy that you want to approach it with, and then just go do it. And then you'll live the life that you want to live. And then you won't be dependent on just sitting, you won't be sitting there going, oh my God, look at that club over there. They're doing it. Look at these two guys on this podcast. They're doing it. I can't do it because my advisor said no, or my teacher said no, or my parents said no. All of those people were idiots, right? If they wanted a life and they didn't get it, they're idiots. That's as far as I'm concerned. You've got to go after what you want, and you just need the right information to do
Yes.
it.
So you're talking a lot about mindset, right? You got to do a paradigm shift in your mind. How you think is how you are. So you think you're going to be booked, you will be. Man, I want to thank you for taking the time to come on.
Honor, my honor. Thank you so much for having me.
All righty. Make sure you go to reinvestorsummit.com/Minesh, Minesh. Yeah, spelling wasn't my forte, That's all right.
Making money, it's all good. You can call me whatever you want. That's fine.
Speaking of this, I know 3 people who are very successful who can't read or write.
Yeah.
They just got going and started making money, and being literate just got in their way. I guess they figured out ways to handle it. So I mean, think about that for a second. There's people, there's people out there that have handicaps that you can't believe, that you can't even imagine, and they're still successful despite the handicap. They just learn to deal with their deficits and go around them or go under them or go over them and figure out some way to deal with it. And we have
a client that's blind, right? And our training is online. So, and he figured it out. We have people that say, "Oh, I'm not good at maths. I don't know how to deal with the stock market." That's why you buy an iPhone. It comes with a calculator, right? You don't need to know maths. You don't need to. Everything's available for you to do. And the biggest thing for me is believe in what you want. Actually believe in it. There's so many people that don't even believe in what they even want for their lives. It's like, it's okay to want to live a good life. It's okay to want to retire in style. It's okay to do these things. Just believe it. I think that's 99% of the game.
Mental, yes, I would say so. Man, refreshing to speak with you. I hope you guys soak that up. If you're not where you want to be, please just change your mind and get where you want to be. It's not going to happen overnight. It won't be a bed of roses, but the way you're living right now is not a bed of roses. So what the hell? Let's get on a different path, right? So I appreciate your time, Minesh. You guys go to reinvestorsummit.com/Minesh, Minesh, and go get a free consult. See what he's up to, and see if it's for you. You never know. You don't know. You don't know if you don't try and you don't listen. It's be very educational at the least. So there you have it. Thanks for coming on, Minesh. I appreciate you.
Take care.
This is Mitch Stephen with the Real Estate Investors Summit podcast. I hope you guys are achieving your goals this year. If you're ahead of schedule, keep pushing. If you're behind schedule, keep pushing. Just keep pushing. All right. This is Mitch. We're out of here.